Finally, after 18 reports and 4.5 months of telling you guys median sales price is going up, it is finally going down. Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers. Now, the data is in, and I finally get to show you guys that median sales price is dropping, which is especially refreshing because I've been telling you guys that's going to start happening right now. Before digging into this week's Redfin article, I'm going to show you guys a few recession indicators first, and then I'm going to go into the article, and I'm also going to show you that Redfin is spinning the narrative and essentially deceiving us with how they're reporting the data. It's absolutely shocking, so I'm going to go over all of that stuff today, and if you guys can, do not forget, please like this video, subscribe if you haven't already, shoot me a comment below, and the most important thing of all, I hope you guys enjoy. Into the recession indicators and quickly going over the M2 money supply. I do want to point out that the M2, which is the money supply in the US, is going down. And for the first time in 90 years, essentially since the Great Depression, the Federal Reserve is hiking interest rates at the same time that the M2 money supply is going down. This is going to update around July 25th, and we're going to see what happens next. But when we have this level of money leaving our system, generally the Federal Reserve is not going to continue hiking rates, which again, the same thing happened during the Great Depression. But one of the biggest arguments of all that we are headed to recession, and the recession is right around the corner, is the 10-year and the 2-year yield curve inversion. You guys can see from this chart that the depth of the inversion is getting worse, and we've been in inversion for a little over 12 months. Historically, we're inverted for 15 months before going into recession. And I also want to remind you that generally before entering recession, this reinverts, which basically signals that we are headed to painful times. I also want to add one new set of data that I found especially interesting, which is the industrial production. Now, the interesting thing about this is generally when this goes negative, it shows us and indicates that we are actively in recession. Again, this is an indicator that we are already in recession. This isn't always accurate, but this has been accurate calling recessions a lot. And you guys can see going back to 1974, when we had a decline in industrial production year over year, we were already in recession. Same thing in 1980 and in 1982. Do you guys see that decline and we're in recession? Same thing here in 1990, same thing in 2001 and in 2008. And in 2020 with one false positive right here in 2015, 2016. But some recessions actually help home value. And what I'm saying is this recession is not. And here's one predominant reason why. The unaffordability is absolutely out of control around the nation. When you have West Coast states like California, where 68% of household income is going to just principal and interest on mortgage, things will not sustain. But if we go even deeper, we've had the worst bank runs since 1929. This year, we had the second, third, and fourth largest bank runs, starting with Silicon Valley back on March 10th, Signature Bank on March 12th, and First Republic Bank on May 1st. And again, the shocking thing about all this is prior to a recession. And I would say a primary catalyst to the Great Depression, besides the stock market crash, would be consumer defaults. When consumers stop paying their bills, the entire banking system fails. So I wanted to bring up the total delinquency rate on all consumer loans. Unfortunately, this only updates quarterly. And I suspect once this updates again, that we will be over pre-pandemic levels of default. And you guys can see the trajectory from Q4 of 2021 till right now has essentially been straight up. Now, the reason I'm showing you this before we dig into the Redfin article is because when we read this Redfin article, I'm going to point out occasions where they're manipulating us. And when I'm reading this to you, I'm pretty sure that you're going to notice they're over optimistic and toxic attitude, but it's not just their attitude. I also found instances where they're manipulating the data, and that's exactly where I want to start. The name of this Redfin article is Housing Market Update. Home prices climb 2% from a year ago with low supply fueling competition. That is optimistic. And I'm just going to read this first paragraph, and then I'm going to show you guys the price decline, and then we'll go back into this article. But let me just read this first paragraph for you guys. Prices posted their biggest increase in over 7 months. The reality is, guys, prices went down. I repeat, prices went down. I'm going to reread this. Prices posted their biggest increase in over 7 months, with more demand than supply as home mortgage rates detour sellers. That pushed housing payments to an all-time high. Prices will likely continue rising for the next several months. Now, I wanted to highlight that because they're saying for the next several months that prices will probably keep going up. Yet, in this report, right in front of our faces, prices are going down. Let me show you. So jumping to median sales price, you guys can see right here that the median home sales price is now down to $382,500. So here's last week's report. You can see the median sales price was actually sitting at $383,750, which means median sales price dropped over $1,200 in the face of their statement where they're saying that they're going to go up for the next few months. But that's not the worst thing of all. Look at how they're manipulating their charts. And guys, take a look at this nonsense. They are literally showing us no price decline on their charts. Do you see that? At best, this shows plateau. So we had a $1,250 drop in median sales price, and they never even showed us that. But that's not all. Let me show you this. Now, when we go back to last week's median sales price, we can see it was $383,750. Now, I'm going to show you the median sales price before this week, because the reality is actually median sales price dropped last week by $50, but I didn't want to be some maniac all excited about a $50 drop. I was waiting for a drop like this, but let me show you. So you could see 2 weeks ago, the median sales price was $383,800, which means last week's median sales price actually dropped $50. Again, 2 weeks ago, median sales price was $383,800. 1 week ago, it was $50 lower at $383,750. So we should see on their graphs either a decline or a plateau. Let me show you what we saw. And y'all, look how ridiculous this is. It shows an upward trajectory. So that's what a $50 decline looks like. Do you guys see that week to week? Do you see how Redfin shows an upward trajectory even though prices went down? And then we go back to this week's median sales price, and even though prices went down pretty sharply, it shows it plateaued. Absolutely pathetic. You guys start to see what I'm trying to show you. Who can we trust? We certainly can't trust the market. Their primary goal is to make money and to make money off of us. And what I'm seeing here is them trying to continue to convince us to purchase in the face of a potential depression and recession. This is absolutely crazy. And not only that, they're deceiving us by how they're projecting the data on their chart. And that's not all. Let me go back into the article and let's read how optimistic they are, and then we'll go into all of the data visualization. The typical US home sold for $382,500, which is a week over week decline of $1,250. No mention of that in this entire article, nor any mention of any of the recession indicators that I brought up at the beginning of this video. Instead, this is what we get. That's the biggest increase since December 2022 and the second straight price uptick after nearly 5 months of decline. So you read that, 2.5% up, the biggest increase since December 2022. So everything is going great, right? Prices are going up, right? Wrong. When we look at the week over week data, we see an entirely different story. And that's why I keep warning you guys about year over year data. In a normal, balanced housing market, year over year would probably be fine. But when we have a housing market where over the last 3 years, the Federal Reserve manipulated it, you got to look at more than just year over year to understand what's happening right now. Take a listen to the reasoning. Prices are rising because there's more demand than supply. Redfin's Home Buying Demand Index, which measures early stage demand by tracking requests for tours and other buying services from Redfin agents, is up 2% from a year ago. Pending home sales are down 15%. New listings down 25%, with homeowners handcuffed to relatively low interest rates. That's called the lock-in effect. The total number of homes for sale is down 16%, the biggest dip in a year, and inventory also posted an unseasonally monthly decline. On behalf of the industry, I am so sorry with this reckless cheerleading. Give us the data, let us make our minds up. And I know I share my opinion, but my opinion is an opinion of caution. Caution generally helps you. It doesn't hurt you. Even though buyers are trepidous about high mortgage rates, we're seeing bidding wars in several pockets of the market because there are so few options and even fewer good options. But the reality is, like I've been telling you guys from the beginning of this year, once that spring and home buying demand season is gone, the housing market is going to crash because there's not going to be enough buyers to continue propping it up. And we saw this same thing happen last year. Back to the leading indicators. So as far as mortgage rates, they're sitting at 6.87%. Now, as of me shooting this video, interest rates are sitting at 7%. Thank goodness they went back up to 7%. Now, mortgage applications are down 21% year over year. Home buying demand is up 2% apparently. Google searches are down 14% year over year. Touring activity is up 17% from the start of the year. Again, you guys see the median sales price is $382,500. Good thing you have me here to tell you that's actually down week over week, $1,250. If we do that on a monthly basis, that's $5,000. Annualized, that's $60,000 drop, which would basically equal around 15%. Sell price increased in Milwaukee the most at 12.2%. Then we have a usual suspect with Miami at 9.7, number 3 Cincinnati, and then Norwalk at 7.3, and Anaheim, California is up there at 6.9%. Home sales price declined still, and they're talking about year over year in 20 of the 50 largest metro areas. Leading that is Austin at almost double-digit decline, followed by Detroit at negative 5.5%, and then Las Vegas at 5.5%, Phoenix at 5%, and Fort Worth, Texas at 5.1%. Visualizing this data again, when I zoom in here, you can't tell that home prices went down. This basically looks like a plateau, but home prices did go down. Now, when they made the comment, we won't see home prices go down for a few months, is if this is the type of trajectory they show, then they're probably right, because even if it goes down $50,000, they're probably going to have it flatlined. What I think is going to happen is it's possible that we have a little slight uptick before it just starts going down and starts plateauing. And again, you guys, I think we're going to be right around here. I think we're going to end the year, and I'm actually betting with a few subscribers that we will end the year with year over year decline. And the crazy thing about all that, again, that would mean if we end there, that essentially anyone that purchased after mid 2021 on average is upside down in their house. So basically where I circled there in green would be the point where people stopped making enough equity for their home ownership to be profitable, at least in the short term. That would essentially lock in all of these people that purchased. Moving to Johnny Fly's set of data, Johnny's always looking at this. This is median asking price, which generally leads, obviously, median sales price. Now, this has basically been plateaued for the last, 2 to 3 months? You guys can see that. Week over week, it's basically about the same. You guys can see the plateau, which probably means it dropped if it's plateaued, right? Because that's what we learned about Redfin. We can't trust their charts, right, and the trajectory of them. But median sales price hopefully will, instead of like going straight and plateauing, we want to see median sales price go down, because obviously that is a leading indicator. And honestly, I'm surprised it hasn't gone down already. It's probably going to start shooting down in the next couple weeks or so. Here's a huge problem right here, you guys. Essentially, unaffordability or housing payments. And that's not just because of interest rates. And that's why I think what we have going on right now is different from the 70s and 80s inflationary crisis. Even though I didn't go through that in my adult life, after studying the information, I would say one primary difference in that recession and inflation was home values did not go up 50% in 2.5 years. So the problem is right now is they've already squeezed the juice out of the fruit, and we're left with mush and pulp. And this is how people get themselves into trouble. This is the pandemony. This is the fear of missing out that you guys see right here. This is the fear, uncertainty, and doubt. And what that looks like, you guys, is $2,656. Essentially, all of these people that bought, according to one survey, 93% of these people have regret. So if you think you missed out, understand that more than likely you would have joined that list of people that had regret. Now, I understand some investors, super savvy, they're out there hunting for deals and they're scoring deals. But most people, like 90 some percent, We're on the struggle bus, man. We can't find nothing. Quick reminder, here's where we were at 2 years ago, you guys. Only 2 years ago, mortgage payments were in the 1600s. Mortgage payments are $1,000 higher in just 2 years. Did your income go up $1,000 a month? I don't think our income went up $1,000 a month. House payments are just not sustainable for much longer. Now, pending sales is down 15%. You guys can see that year over year. Now, I was talking to my broker yesterday, and my broker and I are trying to figure out how to calculate approximately how many buyers are on the sideline and also how many sellers are on the sideline, because we've been hearing that whole rumor when the rates are 5%, there's going to be more inventory than demand, which I would agree maybe a year from now, maybe 2 years from now, but not right now, because I'm really trying to calculate home sellers on the sideline. And I think one of the best ways to calculate that is essentially the difference of new listings from 2020 to 2023. And I basically removed 2021 and 2022 because those were crazy years. So basically, guys, I think that, and again, this is an approximate and I need to get more info, but I think the gap between here, okay, going back to about right here, I think if I really analyze this data, I think it's going to help us get a better idea for how many sellers are actually on the sidelines. And I also looked how many buyers. And so far, preliminary data, there are way more buyers on the sideline, as always, than sellers. So this is what Redfin was referring to earlier with active listings. And I'll show you guys that months of supply actually shot up. And honestly, they failed to mention that. They just all doom and gloom, all fear, uncertainty, and doubt. That's the realtors. That's not me. That's not me at all. I'm like, be aware, right? It's your money. You don't have to list to me. But look at you guys. So we're sitting at active units at 764,000. Now I have a bet with Johnny, basically saying we're going to be at sometime this year right here. Okay, that's 1 million active units. So we're way down here. Now I don't like, I like where we're at right here, because we started the year like way above 2022, okay? But right now that's reversed, so I am getting nervous. You guys can see the gap right there from last year. I don't like that. I'll be the first person to say it. I think I'm gonna be good on median sales price year over year decline, but I'm certainly scared. But before I end the video, I'm going to show you how many new homes are about to hit the market, which is crazy. Here's an absolutely beautiful set of data. Here's the months of supply available on the market. And like I was thinking, you guys, once we had that first increase of inventory right here, I thought that we would eventually, after a week or so, start having that trajectory upward with months of supply. And that's exactly what we see. This is the first time basically since February where we can spot a trend of increase when it comes to months of supply. We need that to be 6. Right now it's 2.8. But that's some really, really positive news if you're on the sidelines like I am. And it looks like we're finally getting relief as far as homes selling above their listing price, which is another name kind of for bidding war. So that's kind of plateauing, you guys. It looks like it's headed downward, which is especially good. And honestly, it's no surprise. This happens almost every time when we leave that spring home buying season. The market's at the mercy of less demand, and that's really where the fundamentals and the lack of sustainability starts to show itself. Another great piece of data, which is the listings that had price cuts, you guys, that skyrocketed up week over week. We are now sitting at 5.7% of listings that have price cuts. You guys, we're almost back on pace with 2022. And remember, this time last year in 2022, that's when we had historical rapid price decline. And again, the leading indicator, one of the leading indicators, which is listings with price drops, is almost closely at pace with last year. We want that to trickle down into prices and into inventory. All right, so one more piece of good news, Redfin home buying demand. You guys can see that week over week, that did trend downward. Thank goodness. Hopefully it will continue to trend downward and get under that red line. The red line represents buying demand last year. Now that's going to conclude our report today. And I hope really what you guys understand about all of this is we need to formulate our own opinion and we need to watch several different data sets. It's so important to understand that a lot of these advisors are saying the things that they're saying because they have a financial bias. And that's one primary reason that I personally got out of sales and origination, a channel like Real Estate Mindset, where I can be pure and completely honest about what's happening in the industry. And other than that, guys, if you're out there investing in real estate, you know I wish you luck and I hope you win.